The UK government is about to unleash the biggest crackdown on landlords in decades, and if you own property or even rent, the changes could flip the housing market upside down. So why now? The Treasury is facing a £40 billion black hole in the public finances, and Chancellor Rachel Reeves is running out of options. With income tax, VAT and employee national insurance already ruled out, the government has turned its eyes on one group they believe won't cost them many votes: landlords. If you want clear, no-nonsense breakdowns of what's really happening in the UK housing market, hit like so more people see this and subscribe to stay ahead of these changes. Right now, most rental income is exempt from national insurance, but that loophole could soon close. The Resolution Foundation has proposed slapping a 20% NI charge on rental earnings, with an extra 8% surcharge above £50,270. For landlords, that's a nightmare. For the government, it's an easy £23 billion a year. Labour insiders have been clear: property income is unearned revenue, and they're coming for it. What makes this more serious is timing. UK rental supply is already shrinking. According to recent market data, the number of rental homes available is still well below pre-2020 levels, while rents are near record highs across most regions. But here's the problem. When you tax landlords, they don't just swallow the cost, they raise rents or they sell up, and that's exactly what's already happening.
Next, capital gains tax. At the moment, your main home is safe. You can sell it without paying CGT. But behind closed doors, the Treasury is reportedly looking at removing that exemption for high-value homes, possibly starting at £1.5 million. That would mean, for the first time, selling your own home could trigger a 24% tax bill if you're a higher-rate taxpayer. This would be a seismic shift. Labour swore before the last election that your primary home would never face CGT. Now, with billions on the line and debt interest still swallowing a huge chunk of government spending, that promise looks shaky. Then there's stamp duty. It raised £11.6 billion last year, but it's widely hated, seen as a killer for first-time buyers and downsizes. Reports suggest the government is seriously considering scrapping it, but here's the catch: in its place could come a new annual property tax. Homes worth over £500,000 could face a 0.54% yearly charge, with higher rates on properties over £1 million. So instead of a one-off hit when you buy, it's a permanent bill every year. Great news if you're buying cheap, devastating if you're sitting on a London townhouse. And remember, London prices may have stalled recently, but they are still far above the national average. An annual tax like this would fall hardest on long-term owners who are asset-rich but cash-poor. And it doesn't stop there. Council tax is still based on property values from 1991, which means someone in London can pay a similar rate to someone in the north, even though their home might be worth 10 times as much. Economists call it broken, politicians call it unfair, and Reeves may be the one to finally press the reset button.
But here's the danger. A sudden revaluation could wipe tens of thousands off house prices overnight. That's why most housing experts warn reform has to be slow, phased, and cross-party. But with a major budget looming and pressure from the bond markets, slow may not be on the table. Here's the twist. More than 1 in 8 MPs earn rental income themselves, including over 40 Labour MPs and even several cabinet ministers. So, while politicians profit from property, they're preparing to squeeze ordinary landlords harder than ever. Critics call it hypocrisy, Labour calls it fairness. The truth, it's about revenue. If you're finding this useful, subscribe to the channel. We cover UK property, policy and money moves that mainstream headlines miss. So what happens if these changes land all at once? Analysts say many landlords will simply sell up and leave the market. That means fewer rental properties, and fewer rentals means higher rents. Tom Bill of Knight Frank put it bluntly, when you tax an activity, you get less of it, and right now the activity is renting out homes. Zoopla has already warned that policy uncertainty is stalling the housing market. Buyers are waiting, tenants are nervous, and landlords are caught in the middle. Mortgage approvals remain weak, transactions are subdued, and confidence is fragile. Landlords are being painted as the villains, an easy target to plug Britain's financial hole. But the truth is, these reforms won't just hit landlords, they'll hit tenants, buyers and sellers too. The next budget could reshape the housing market for a generation, and whether you own, rent or dream of buying, what happens in the coming months could change your life. So what do you think? Are these reforms long overdue, or will they backfire and make the housing crisis even worse?